In this fifth and final video, I'm going to discuss what it takes, what it means to, and how to get your vacation home financed, because it is different than it is to finance your primary residence. And there are several key points I'm going to discuss here. First thing you just need to realize, you got to put at least 10% down, and you only can do a conventional loan. You can't do an FHA loan or a VA loan on a second home or vacation home purchase. Second thing you need to realize is Fannie Mae and Freddie Mac made financing a vacation home much more expensive earlier this year, of where with just 10% down, they now charge you a little over 4 discount points, which is 4%, a little over 4% of the loan amount. So if you're borrowing, say, $500,000, that's an extra cost of a little over $20,000. Now we can help pay some of that for you by raising your rate, but we can't eliminate that extra cost for you completely. Third, you just realize it's always easier to finance a townhouse or a single family home. There's always additional rules, costs if you do buy a condo. Now, a lot of people don't know, okay, truly, what's the difference between a condo and a townhouse? And a condo, you only own the airspace in between the interior walls of the property. And so you will have, always have neighbors potentially above you, below you, beside you, that kind of thing. And a townhouse means you actually own the land underneath the property. So that means you definitely do not have anyone below you or above you. You may have neighbors to both sides, but since you own the land underneath you, you own that land and the space above it, as well, in essence. But just know this, there's a lot of condos in Colorado that look like townhomes, but they're legally condos. So you have to go deep sometimes into the legal description of the property. And if you see the word condo or the initials CC and R's, then it's a condo. And this can be hard to find. A lot of times we don't always know for sure until we get our title commitment from the title company. Next thing, if you look at buying a condo-tel, just realize if you do that, you're going to have to put at least 25% down on that type of property. And you're going to have higher interest rates. You're going to have different terms. You may or may not be able to get a 30-year fixed rate loan. You may have to do or may want to do a 5-year, 7-year, or 10-year adjustable rate mortgage instead when you finance a condo-tel. Now, if the current owner is doing, like, say, Airbnb or VRBO, we may be able to treat that just as a normal condo. But if there's a management company involved managing that property and they have restrictions on when the owner can use it, then we're going to have problems and we're going to treat it as a condo-tel. And on condo-tel loans, Fannie Mae and Freddie Mac will not buy those loans from us. So we have to do, what's called a portfolio loan, which means you're putting at least 25% down or more. And that's a type of loan that we offer, but also a lot of times your small local banks in each mountain town will also offer that type of financing for you as well. Okay. Next is, where does the cash come from to buy your vacation home? It could be from your savings that you've been working on. It could be a cash out refinance on your primary residence or another property you own. It could be from a HELOC or home equity line of credit, on your primary residence or another property you own. A fourth source for cash that is allowed is gift money from a family member. Or fifth, sometimes different groups of families, different couples, or just friends buy the home together. And there may be, 4 to 6 people who buy the home together and finance, so you all share in the down payment, you share in the monthly payment as well. A couple other costs I just want to highlight for you that may happen on the monthly payment side of things. One is flood insurance. You're going to much more likely to incur flood insurance premiums in mountain towns, especially if you're near a river, a lake, a creek, a drainage area. And those costs, maybe $100 a month and maybe $300 or $400 extra a month. We don't know, but that's something you got to realize. A second cost that you'll see in mountain towns, especially ski towns, the HOA dues can be outrageous. I've seen as high as $700-800 a month for HOA dues in ski towns on their condos. So you got to factor that in to your monthly payment and go, okay, can we really afford this property, as we discussed earlier. And so I hope you have found this series of videos to be incredibly beneficial for you. But if you still have questions, please reach out to me, and just know I would be completely and totally honored if you would allow me to be your mortgage loan officer as you look to buy a vacation home, and I can share more of my experience with you. And so please feel free to text me at 303-881-6374. And if you've liked this video and the other videos, please share them, with your friends, family, coworkers, and subscribe to my channel for more great videos.